Bismillahirrahmanirrahim. Ladies and gentlemen, Assalamu alaikum. Today, I am reviewing the basis of fundamental analysis of a company to examine how it can be broken down into quantitative and qualitative factors. Introduce the subject of intrinsic value and conclude with some of the downfalls of the use of this technique. However, the very basis when we are talking about stocks, fundamental analysis is a technique that attempts to determine a security value by focusing an underlying factor that affect a company's actual business and its future prospect. On a broader scope, you can perform fundamental analysis on industries or the economy as a whole. The term simply refers to the analysis of the economic well-being of a financial identity as opposed to only its price movement. Fundamental analysis serves to answer few questions such as: number one, is the company revenue growing? Number two, is it actually making a profit? 3. It is in a strong enough position to beat out its competitors in the future. 4. Is it able to pay the debts? Number 5. Is management trying to cook the books? These are the questions, of course, are very important questions involved in it. And there are literally hundreds of others you might have about a company. It all really boils down to one question: is the company stock a good investment? Think of a fundamental analysis as a tool box to help your answer to this question. I will say it should be noted that the term fundamental analysis is used most often in the context of stocks, but you can perform fundamental analysis on any security from a bond to a derivative. As long as you look at the economic fundamentals, you are doing fundamental analysis. For this purpose of the tutorial, fundamental analysis always is referred to in the context of stocks. Now the question, what are the fundamentals of quantitatively and qualitatively? Now it can be defined fundamental analysis as researching the fundamentals, but that does not tell you a whole lot unless you know what the fundamentals are. As we mentioned in our discussion, the big problem with defining fundamental is that it can include anything related to economic well-being of a company. Obviously, items include things like revenue and profit, but fundamentals also include everything from a company market share to the quality of this management. There are various fundamental factors can be grouped into two categories. One, quantitatively and qualitatively. The financial meaning of these terms is not all that different from their regular defining of the term. It is not at all that different. However, here is the MS and Carta dictionary defines the terms quantitative, capable of being measured or expressed is numerical terms. Qualitative, related to or based on the quality or character of something, often as opposed to its size or quantity. In our context, quantitative fundamentals are numeric, measurable characteristics about a business. It's easy to see how the biggest source of quantitative data is the financial statement. You can measure revenue, profit, assets, and more with great precision. Turning to the qualitative fundamentals, there are the less tangible factors surrounding a business. Things such as the quality of a company's board member and the key executives, is brand name recognition, patents, or proprietary technology. Now, the qualitative means quantitative, meaning thereby, if the things are quantitative, they will meet qualitative. Neither qualification nor quantitative analysis is inherently better than the other. Instead, many analysts consider qualitative factors in conjunction with the hard quantitative factor. Take the Coca-Cola company, for example. When examining its stock, an analyst may look at the stock annually divided payout, earnings per share, per income ratio, and many other quantitative factors. However, no analysis of Coca-Cola company would be completed without taking into account its brand recognition. Anybody can start a company that sells sugar and water, but few companies on earth are recognized by billions of people. It's tough to put your finger on exactly what the Coca-Cola brand is worth, but you can be sure that it is an essential ingredient contributing to the company's ongoing success. Now the question would be, what is the concept of intrinsic value? Before we get any further, we have to address the subject of intrinsic value. One of the primary assumptions of fundamental analysis is that the price on the stock market does not fully reflect a stock's real value. After all, why would you be done price analysis if the stock market were always cannot? In financial true picture, the true value is known as the intrinsic value. For example, let's say that a company, a stock was trading at $20. After doing extensive homework on the company, you are determined that it really is worth of $25. In other words, you determine the intrinsic value of the firm to be $25. This clearly relevant because an investor wants to buy stocks that are trading at the price significantly before their estimated intrinsic value. This leads us to one of the second major assumptions of fundamental analysis. In the long run, the stock market will reflect the fundamental. There is no profit in buying a stock based on intrinsic value if the price never reflected that value. Nobody knows how long the long run really, as it could be days of years. That is what fundamental analysis is all about. By focusing on a particular business, an investor can estimate the intrinsic value of a firm and thus find opportunities where he or she can buy the discount if all goes well. The investment will pay off over time as the market catches up to the fundamental details. Now the video is going to be a bigger one. That's why I stopped the discussion, because it is a basic intro in respect of the fundamental analysis. Inshallah, hopefully, this will be the part 1. I will continue to part 2. Thank you very much for your listening.